Hi, welcome back to the channel. Today we're going to be looking into the best way to invest your first £1,000 within the stock market in 2021. If you're new here, my name's Ben. I make videos in investing in the stock market and I share all my investing experiences with you guys. So before we get into the video, I'd be grateful if you left a like and dropped a sub. And as I say in all my previous videos, I'm not a licensed financial advisor and this is just my opinion. Anyways, let's get into the video. So for you that are watching this video and this implies to you that you've managed to save around £1,000, first of all I want to say well done in managed to save this amount so far. Especially if you're young and you're in your teenage years or even within your 20s. By just having £1,000 to spare, you're doing a lot better than most other people out there. So in this video we're just going to be focusing just on investing in the stock market and using this first £1,000 as the foundation to building your wealth. So if we compared building your wealth in comparison to building a house, this first £1,000 will inevitably be the foundation to build up your wealth over time. Of which then over time you can then add more to your position, inevitably building up your house or building your wealth. So you've got your first £1,000, but where do you start? Well, you could begin with index fund investing. Index funds being made up of loads of individual stocks all coming under the one umbrella of one fund, where it's somewhere you can store your money away and potentially add to over time to potentially build up your wealth in the long term. Popular index funds including the S&P 500, which offers a return on investment of around 8 to 10% a year, including its annual 1.57% dividend, which can then be reinvested to give you this return. I believe investing in index funds is just really simple and easy, and it's a way to passively generate wealth over time and make your money work for you. Or secondly, you could buy individual stocks. Investing in individual stocks is more riskier than investing in index funds, as obviously you're picking that individual stock rather than a collective of stocks. However, sometimes investing in individual stocks can give you better returns on your money. Personally, I do invest more in individual stocks as I am only 19 and I can afford to take more risks with my money, as now is the time for me to potentially make mistakes that I could learn from and interpret in my investing in the future. But I do also invest in index funds to manage the risk in my portfolio. Now you've got your £1,000 and you want to invest in individual stocks, but you don't know what stocks to pick. Well, when you're an absolute beginner and you don't know where to put your money, I highly recommend you do either of these two things. Number one being to invest in what you know. For example, invest in industries that you're passionate about or you feel like you're working in and you know a lot about. For example, you could be working in a bank and therefore investing in the financial industry could be the way to go for you. Or say you work in tech, so likewise you invest in the tech industry. Just to put it simply, put your money on what you have knowledge on. I'm not saying to go invest on exactly where you work and what industry you work in. For example, I work in retail and I don't invest in anything retail whatsoever. But what I'm trying to say is, don't put money or invest in areas that you really don't know and just unsure about and you've just been told to invest by other people. Start by investing in what you know and then potentially build up your knowledge within the market over time. And the second best way to start picking stocks is to invest in what you're a consumer in. For example, you own loads of Apple devices, you got an iPhone, you got an iPad, you got an iPod or did have an iPod or a Mac or whatever you've got, then why not buy Apple stock? If you really like the product and you really like their brand, then why not get behind their business and invest in their stock? Likewise, you like eating at McDonald's, well why not buy McDonald's stock? You like drinking Coca-Cola, invest in Coca-Cola stock. You're always on your phone on social media, whether it be WhatsApp, Instagram or Facebook, buy Facebook stock. Likewise, use Amazon all the time as there's nowhere to go to buy anything as we're all stuck inside doing nothing in lockdown. So why not invest in Amazon stock? Again, what I'm trying to say is try and interpret your knowledge and what you use in your day-to-day life and simply just put your money where you think it applies best to you and that you invest in companies that you really like and you love the brand, you think there might be a really good business going forward in the future. The next question you want to go and ask yourself when investing your first £1,000 is the investment strategy you're going to be using going forward. There are loads of different types of investment strategies out there, but today we're just going to be focusing on the main two. That being investing for dividends versus investing for growth. Investing for dividends is whereby you put your money in dividend paying companies And essentially what they do, they pay out a small percentage of their profits every quarter in the form of a dividend. This form of income stream is known as passive income, where you yourself are doing no work whatsoever, you're putting your money at work, your money making you more money. This essentially over time is really good, as you can then build up your wealth by essentially making a passive income stream. Or on the other hand, you could be investing for growth, whereby you invest in companies where perhaps they don't pay a dividend, but you feel as if they're going to grow and expand their business over a long period of time, so therefore you buy the stock hoping that the stock will appreciate in value. Personally, the whole time I've always invested in growth stocks. However, recently I have just started up a dividend portfolio, so now I'm currently using both investment methods. However, I am more focused on my growth stocks. So yes, you may want to choose either or of the strategies, or likewise you can invest in both types of strategies, exactly what I've done. But overall, you want to use this first £1,000 invested to increase your overall knowledge. But what do I mean by just increasing your overall knowledge? What I'm getting at is that you just want to test out the water, you just want to learn how the overall market works and how it behaves, as you will learn more over time the longer you invest in the market. Whatever you do with your first £1,000, use it to potentially give you an insight into what it's like investing in the stock market as a whole. You don't want to be going ahead and investing loads initially as a beginner, and you just want to try it out. And I believe £1,000 is a really good starting point. If not, you can start with a lot less, even £100. Or if you feel really unsure about investing, you can literally just invest £1, especially with trading 2-on-2. And if you haven't already, use my link in the description to get a free share, potentially worth up to £100. Anyways, use your first £1,000 to know when to buy and sell a position, potentially look into the trends on graphs if you want to. Overall, just play around with it and see what you can make of it. Even if you go ahead and lose 10 to 20% of your first £1,000 invested, I guarantee you it'll be one of the best things that's ever happened to you when trying to build your wealth within the stock market. As when you come to add more to your position and you're playing with maybe 10,000, if not even £100,000, you can learn from your previous mistakes and not repeat them. Personally for me, I made so many mistakes when I first started out investing. At the time when I started investing, around this time last year, the stock market was currently in a downturn, and I decided to invest in all the companies that were really hit hard from the pandemic and choosing the majority of the travel stocks. LOL! Initially around in June, the stocks were going crazy and the returns on my investment were up at a considerable amount considering what I actually had invested. Little did I know that this was the time where I should have sold my positions. Likewise, I then held, so then after I held, I was down in pretty much all my positions for around the rest of the half of the year. This then led me to miss out on opportunities like Apple and Tesla, as I didn't want to sell at a loss in my other investments, and essentially I could have got in at a much lower price than what they are today. Since then, I've managed to sell my positions at a profit back when the vaccine news was released and all these travel stocks boomed in the short term, and I was managed to sell at a good profit. I've managed to learn from my mistakes by being able to identify when a stock is overvalued and I should get out of my position, and likewise knowing more about what industries I should really invest in. However, I am still thinking about buying into the travel industry, as it was a previous career aspiration I did have before the pandemic did kick off. However, for now I am going to see how it pans out, and especially here in the UK after June, potentially whether or not travel stocks could boom in the summer. But like I said, use this first £1,000 to obtain more knowledge upon investing in the stock market so that you can scale upwards and invest 1,000 to then 10,000, from 10,000 and 100,000, and potentially one day even £1 million. But anyways, that is it for this video. I hope you enjoyed. Like I said at the start of the video, I'm not a financial advisor and this is just my opinion only. Feel free to leave a comment on asking any questions on investing in the stock market, or DM me at my socials, they'll be in the description below. If you really did enjoy this video, share it around with your family or your mates, and if you haven't already and you leave a sub, it'd be much appreciated. Anyways, I'll see you in the next one. In a bit.